Everyone, the year is coming to an end. How has the year been for you and your investment portfolio? For me, we have done very, very well. I just want to share with you in this week's video how I made 1.2 million on one stock, and that is actually Alphabet A. As you can see, this is actually my UBS private banking account, which actually showcase that I have 12,400 shares in Alphabet A. And the price gained as of this week was up 65% when it closed at 195.40. This means that the total value of my Google A is 3.3 million. So you work backwards, when I invested 2 million 3 years ago, that value has gone up to 3.3 million. So I'm sitting close to 1.3 million of profits. In this week's video, I want to ask and discuss with you in detail, considering the fact that we've made a lot of money this year, and Google is only one of the stocks that we have made millions on, the prospects for next year, and how should you navigate the investment market for next year, how you can, just like me, make millions in your investment portfolio. As you can see, the other stock I have in my portfolio is Amazon, for which I own 3,350 shares. The price is up 35 or 36% this year when it closed at 230.62 at the end of this week. And my total portfolio value now is $1 million. So you may be asking, how are you able to continue to rip millions in your investment? This is something I want to share in this week's video. For 2025, ladies and gentlemen, one market that I wouldn't be touching or reinvesting my profits, should I actually take profits on my Alphabet shares, is the Singapore stock market. Yes, I have been avoiding the Singapore stock market since I left the industry in 2009. For the last 16 years, I've invested globally, and I've encouraged all my GCP global investors to do likewise. We are actually heavy investors of tech stocks in the US, multivariate industries, the Magnificent Seven, as well as many luxurious stocks, pharmaceutical stocks in Europe. So in our global portfolio, we have continued to do very well 16 years. As look at this call, for views on why retail investors continue to shun the Singapore market. It's actually very clear. They have established committee to establish why the depth in the Singapore market is clearly lacking. Why is there, especially the Generation Z and the millennia are avoiding the stock market in Singapore? A very wise decision, I would say. Simple reason, you can't make money in a Singapore stock market. Now, this is a chart, ladies and gentlemen, of the STI index, which incorporates the 30 stocks index in Singapore. This for the last 35 years. Let's look how it has performed. You notice that for the first 20 years or so, they have actually ranged between 1,500 to 2,005 on the index. Now look at no further in the last 25 years, where it ranged from 2,500 to 3,500 on the index. Mind you, ladies and gentlemen, the index is basically just 30 stocks, 7 REITs, 3 banks. The banks themselves are actually the ones that have been powering the index, particularly this year, where they managed to break out of 3,005. Now, do you want to be invested in a market like this? Ask yourself. Estate Investment Trust, for those who have been attending GCP Global REITs classes, we have advised them since the pandemic struck that REITs are no longer investable assets. They are good for trading. So for example, in the previous video that I did on Parkway Life, I've told you that Parkway Life, similar to many other REITs, have continued to undertake acquisitions that are bordering on the mind, affecting very little margin of safety for investors. So do you want to be downtrodden by and encapsulated by the potential danger on this? And true enough, you can see from the chart, the share price continued to trade below the placement price of 380. Avoiding markets, avoiding the asset classes that lose money for you is one key thing. But where to put your money for 2025? Well, look no further, ladies and gentlemen. Look at the market that generate the greatest amount of billionaires. Look, I mean, just this week, Elon Musk became the richest man in the world. Wealth, US 400 billion. Guess what? One man's wealth of 400 billion already exceeds Singapore's GDP of 300 billion. Can you just imagine that? Now, ladies and gentlemen, in life, life is difficult, especially in Singapore where it's so expensive to live in. If you can't actually fight it, join the man, ladies and gentlemen. That's what we do. In our investment classes, we follow the latest trend. We make no bones about it, and we follow the smartest investors in the world, particularly the hedge funds. And that's where we invest and make our millions. Come join us, only if you want to make millions, not kacang putih. Now let's delve into our choice for next year. Are you sure, you may ask, that the US stock market continue to be a market to be investable? Look no further, ladies and gentlemen. This chart shows the performance of the US market, outperforming, the first one is the SPX, the second one is the NDX, which is the Nasdaq index. They outbid the MSCI Global Index as well as the MSCI Developing Countries Index. Will it continue next year? Well, my bet is definitely on it. And some people may say that, hey, this year the market is up 28%. Last year it was up 26%. Can we continue for next year? Now, there is really historical evidence to suggest that just because you have 2 great years of stock market outperformance, the third year cannot continue to be fabulous. In fact, it can, as this table shows you, that even you're up 20% 2 years in a row, there is still reason not to be bearish. In fact, there's even possibility of greater outperformance in the third year. You may ask, am I being carried away? Well, this is something that I will discuss in detail in my next class on 8th of February 2025. Do sign up and enjoy the early bird special if you want to know where to make millions. Many skeptics have always put their focus wrongly. That is, they focus on how high the market has gone up, how high valuations have gone up. But let me tell you, in my last 35 years of investing history, 20 years of which has been in the US market, it's very clear that it is not just 2 parameters, but more importantly, the third parameter, that is earnings growth of or EPS of S&P 500 companies. And next year, it's looking good or even better than compared to this year. So yes, we are, as this chart shows, at the edge, where if you compare to 2000 during the pandemic and in the 80s during the dot-com bubble, that's roughly the kind of height we are in. But nonetheless, if earnings growth continues to be strong, the market continues to be able to benefit using under the Trump's policies. So in that sense, ladies and gentlemen, from the US, we move on to Europe. In Europe, essentially, you notice that one of our favorite stocks is actually Hermes. We believe that essentially global luxury will continue to be set to recover in 2025 after this year, which has been one of the worst years since the crackdown by Beijing in 2014 to 2015, which had been bad for luxury markets, luxury stocks. Well, in our classes, we continue to highlight the likes of LVMH. You can see from the chart, Hermes, which one of our core holdings, have had a very interesting year, but nonetheless, we are still ending this year close to where we begin, meaning no losses. So with the dividend, with the better positioning, with the opportunity to buy at lower prices, as you have seen this year twice in the chart, that sets us up well for 2025. Now, we are still, of course, investors of LVMH, the largest luxury player, which owns Kenzo, Loewe, Bulgari, Loro Piana, and Tiffany. We are also, and this stock has done very well for us, investors of Essilor, Luxottica, which actually owns Ray-Ban, the brand, and many other spectacle brands. As you may be thinking, yes, some of my fanciful glasses are actually purchased from there. And they must, having made 1.2 million on Alphabet A, having seen the share price gone up 65% in just 3 years, do I still hold on to Google? Well, for me, at this juncture, the answer is yes. Despite the DOJ claims on Google being a monopoly. In fact, the fact that Google is a monopoly and established by the DOJ is even a better reason to be buying a monopoly, because a monopoly basically means that you have secular income that is secured. The elasticity of demand is very high. How the consequences of Google, if it's rebroken up, well, we don't think that far, because in our analysis in our classes, we base on real life experiences. We don't base on extrapolated scenario. Okay, so for example, look at Google. It's still relatively cheap. Over using the forward S&P minus the S&P equal index, meaning that we take off the Magnificent Seven. How does the valuation stand? In fact, among the Magnificent Seven, they continue to be one of the cheapest and best value stocks. I'm actually interested. Found it interesting that finally, when I actually saw in Business Times, Straits Times, the fact that trainers of financial institutions have highlighted, should come under recognized qualification. Well, it's a long time coming, because, I do find, that in financial training, which we have been doing all this 35 years, there's been a wide disparate of standards in the market. For us, we are concentrate on making the millions for our investors. I have a CFA. I've been a head of research, in fact, Singapore's youngest head of research, way back in 1994. And I've been head of financial institutions, in terms of equity sales, for a couple of years before I retired in 2009. So we are the ones with the credentials. Do come to us if you want to know how to continue to make millions. Our next class is actually none other than Saturday, 8 February, 2025. Hope to see you, so that we can help you to reorientate, to actually regurgitate and juxtapose your position, so that you continue to be like us, make millions in your investment portfolio. Till we meet again, do sign up then.